Good afternoon, everybody. It's Wednesday, September 4th, 3:15 p.m. Eastern. S&P 500 bulls are up at the high of the day. There is very little resistance between here and the top of the August bull move. So there's a couple things to be watching because the break of the August bull move alone is not going to be enough to be convinced. And what I mean by that is what we saw happen last time, where the SPY daily time frame broke 294.15 and got no follow through. And we knew not to expect follow through because QQQ did not break its daily resistances. So if we see individual names like QQQ or like XLF or oil or all these other factors not getting the breaks that they need, then we have to be cautious because we could always see a bull break to 295 and then start consolidating again. So the most important event is going to be the FOMC, which is in, I think, 9 trading days from right now. That's still a good amount of time. The last time we had the FOMC, it led to an all-out dump. So it's entirely possible that even if we do get a bull break, the FOMC reaction could erase that. So just laying out all the scenarios where the bulls have a ton of favor right now, where we are 50 cents away from a bull break, and we are essentially $11 away from a bear break. So obviously a very big difference there. And it's almost even more bullish to me. I keep saying it, just the amount of bearish fundamental chatter out there with it not being reflected in the price. So we'll see tomorrow if the bulls can break 294.24 or not. Again, I laid out in the chat room the things that I need to see happen. I need to see the financial sector. Let's just go over it real quick. So the financial sector, I need that to change the daily trend with a higher low and a higher high breaking 27.06. If I'm going to believe the S&P 500 bulls, I have to see QQQ break the top of its August bounce, 189.68. And I want to see IWM change its daily trend by getting over 150. If all of those things align, then the S&P 500 definitely has a lot of strength. Dollar on the daily. Big pullback today, so we have the bearish reversal candlestick being confirmed. The hourly time frame was a bear flag this morning. That confirmed and saw follow through. And anything on the hourly under 98.68 is just a lower high, with the bears keeping full control as long as the hourly downtrend continues. Gold, right at a double top of 1555. That's not a convincing enough break for me at this point. The bulls certainly have favor, and anything above 1533 is a 4-hour higher low, but we need to see more than a dollar bull break from this key 1555 range that the bulls are trying to make their way through. Also worth keeping an eye on this daily RSI equilibrium that's forming. Silver, still extremely strong, 4-hour time frame, trying to confirm the bull flag. 1957 is resistance that has to break. We're heading up to that level, and key support is 1917. So oil had a huge day today. It did finally end up seeing some pullback fairly rapidly, but if you look at the half-hour chart, it was just automated buying as far as I'm concerned all day today. But the daily chart was unable to break the lower high. Anything under 56.86 is just a daily lower high. So what we're going to have to see into tomorrow is either an hourly or a 4-hour bull flag looking for that continuation. So just like SPY or just like QQQ has these daily lower highs, so does oil. Bigger picture for oil, the weekly equilibrium. And this weekly equilibrium has been playing out for 11 months. And let's draw these levels if my magnet can work. Double bottom at 50.51. I consider this a weekly lower high. And the reason I consider that a weekly lower high is just the very clear pivot where we dropped down, we hit support. This was the highest price that the bulls could bounce to. And then from there, we pulled back all the way down to 52.82. So we ended up pulling back almost, 8% or so to form this higher low. And for me, if we break 57.43, if you want to be aggressive, that's going to be the first signal to act on because that's going to give us a weekly higher low and higher high. If you wanted to be more patient and use 60.91, it's entirely possible that we break 57.43, and don't see a break of 60.91 initially, because that would take 6 or 7% of follow through that level. But that's the short-term level. That's the highest price in 6 weeks, 5 weeks. And for me, that would be the start of a bull break. So 57.43 is the most important short-term resistance for me on oil. As far as short-term action on oil, 4-hour bearish reversal candlestick, we'll just be looking for a higher low to form if that gets any follow-through. But at this point, it's just an hourly bull flag attempt right now. And it's almost like oil played catch-up today. Because again, if you look at the SPY daily chart and you compare it to oil, SPY was right up at the high, which was its lower high, and oil had to really catch up after that big bear day, flushing people out yesterday, getting right back up to its recent high, which was August 29th. On SPY, August 29th was the day before the lower high. So certainly still correlations out there, and a big day of catch-up after a very severe drop yesterday. In my opinion, that's just games, in the sense that that drop was to likely stop people out. We saw some unusual activity, some big loading in UWT, and then getting that follow-through to catch up to where the S&P 500 is as far as correlation goes. Natural gas, huge day for the bulls. 250 is in sight. The inventory report tomorrow is going to dictate whether we break 250 or whether we reject from it and see a daily inside bar, in my opinion. So the hourly time frame, we need a healthy hourly higher low to form. Look at what the commodities did today. Just oil and natural gas blistering higher. 4-hour higher low for natural gas, anything above 233.7 keeps the bulls in full control. So the bulls are so comfortable where even if it's a bearish reaction to the inventory report, yes, we reject from 250, but a daily inside bar will be the most likely scenario. And then if we do reject, we'll be watching for the potential of a cup and handle if we get a little daily bull flag, as the weekly time frame is shifting this momentum, trying to get over exponential resistance, bull cross of the MACD. And the question is now for natural gas, where is our monthly lower high going to be set? Because there is a lot of space. It could be set, if we break 250, it could be set at 270 or it could be set at 320. We have no idea, but all we do know is that it's a very clear shift in momentum back to the bulls for the first time since we topped out back in the fall of last year. Bitcoin bulls looking good. Daily inside bar still forming, but we made a nice big move on the hourly time frame. An hourly bull flag is trying to form. And it's 10,687 and 10,783 as short-term resistances. No red flags for the bulls at this point. Healthy 4-hour consolidation right off exponential support and headed back up to test the recent high. It's just a question of, will this candlestick close as a daily inside bar, and how is it going to break tomorrow? Commodities have so much volatility. And I said that in my cryptocurrency video where, cryptocurrency definitely has volatility and some nice opportunity, but this entire big bull move on Bitcoin over the last 6 days, the leveraged ETFs and oil did that percentage in one day today. So the opportunity, in my opinion, if I'm always trying to be where there's the most opportunity and volatility, right now it's in the 3 times leveraged commodity ETFs, both with gold miners and natural gas now and oil. And oil hasn't even broken its tightening range, and we're still seeing that kind of volatility. So I am definitely still interested in cryptocurrency, but as long as there's greater opportunity elsewhere, it will always be secondary. Once cryptocurrency is the best opportunity, as it was in 2017, that's when it becomes my number one priority again. So we'll start it off with ASHR, which is a large cap China ETF. So bullish reaction. August dumps, blowing right through it. So China's recovering back to where we were, or at least the large caps are. 28.37 is the most important resistance, but there's plenty of resistance before that. 28.03 is the next level. Anything on the daily chart above 27 is a daily higher low. Definitely some correlations and some similarities with the S&P 500 here, but clearly breaking to higher highs and clearly a bit stronger. Looking at it on the weekly perspective, I would still consider anything under 28.37 just a weekly lower high. So bulls are not out of the woods yet. If we do reject from 28.37, the weekly lower high pattern will continue. XBI has been the weakest sector. We did drop to a lower low today on any bounce attempt. Resistance is 81.52. You can see the very clear lower high pattern on all these bounce attempts. And until that changes, the bears are going to keep their control. In my opinion, the closer we get to the election and the more we have candidates talking and debating and all that, in my opinion, that's some downward pressure, which is probably being priced in to a certain degree in the sector. I would be watching for the December dump to hold, but there's still a ton of space where we could pull back. We basically just don't have any clear support, which is always a dangerous territory to be in. We're looking down at 72.15 after 78.60, and we broke 78.60 today. Actually, 76.84 is the next level before we have a gap fill. Bull miners, continuation, although just like gold, got the bull break that's not convincing. Same thing for NUGT right here. Getting over 44.74 is nice, but it's a double top at this point. So that's only a red flag if we lose the hourly uptrend, and anything above 42.35 is an hourly higher low. So we may need an hourly higher low to form before we give that level another good attempt. So CGC had the red flags this morning for a lack of follow-through, a significant bounce, but just a lower high, and the hourly equilibrium is the most likely scenario due to the size of the range from the high of the day to the low of the day. It was a very nice bounce, but to go from 24, we bounced over 4%, and still we were 1% away from the high of the day. So that's when the scenario for an equilibrium is the most likely. And if we do see profit taking into the end of the day, our lower high will be 25.13, and the bulls will have to form a higher low compared to 24.02. VFF had a bullish reaction to its news. It was one of the weaker bouncers on the daily time frame before today, but playing catch up now. I still consider the most important daily resistance 13.22, but with the size of this bounce the last couple days, the odds of the weekly higher low being set are likely. So low, high, higher low at 10.05. And the question now over the coming weeks, are we going to form a lower high compared to 14.60? That's probably the most likely scenario. That's still over 25% from where we stand. So we have to be watching for the potential, unless there's some kind of catalyst. We'll be watching for the weekly equilibrium to play out through September. That being said, we still have to, well, you could consider that the daily trend change. Again, it's a daily trend change of the weaker variety. Hourly is a potential equilibrium with the high of pre-market. 11.59, if we were to reject from that level and pull back, we would have an hourly equilibrium. But if we can break that level and close strong into the end of the day, we're looking up at 11.67 as the next resistance. So still liking VFF and APHA better than the other major Canadian MJ names because their weekly bounces are much more developed. AMD with a perfect rejection right from resistance. 31.87, 31.83. So there's our double top, and we are remaining in this tightening range. And I would say anything above 29.40 is a daily higher low. And this is the 2-day time frame to make it nice and clear. But a perfect rejection from bears today. NEW breaking out on the daily in a big way. Lack of resistance as soon as the bulls got over 7.11. So we're looking at 8 psychological. And then 8.80 after that. Hourly higher low to keep the bulls in full control hasn't formed today. So we need an hourly higher low. Next time we consolidate, we will anticipate that will form. And we know consolidation is coming sooner rather than later. So if we were to close here and if we couldn't break $8 first thing tomorrow, we'd look for the pullback for an hourly higher low to form. So DWT with a weak short-term bounce, we have to be cautious because if SPY is going to break its daily resistance, that increases the odds to me that oil is going to break its resistances in the 57s. And if that's the case, we could see an hourly or a 4-hour bull flag on oil. And right now it's a bear flag on DWT. So it was a nice quick bounce, but a lack of follow through at this point. And it's going to require oil to continue to pull back overnight in order to see this bounce get follow through. Anything under the high of the day is just a lower high. So best case for the bulls on DWT would be to see follow through to perhaps 630s. But that would just be an hourly lower high, and then we'd look to pull back for a higher low from there. So the oil bears' backs are against the wall. That being said, it is a potential top fishing play on oil with where we do stand. 56.86, we got up to 56.55, and we're slowing down. It's just a question of whether or not the bulls can see healthy consolidation and break those resistances, or whether we pull back and form just another daily lower high. And it all depends on where your DWT entry is, if in a position, as far as how comfortable you would be seeing this try and play out. If you are top fishing oil, you want to see SPY reject as well, just due to that correlation. It comes and goes, but it's certainly been fairly present the last few days. And the daily chart, like I said, certainly a lot of correlation showing there as well. BYND. So BYND, not bad follow through as far as the amount of consolidation we're seeing. Again, we're looking for a higher low compared to 146. And this is declining bear volume and healthy consolidation so far. Bulls have to change the hourly trend. And we double topped at the high of the day, it looks like. So 165.50 is a double top. Bulls need to hold the low of the day and then break that level tomorrow for us to say the higher low has been established. And then we'd be looking back up at the recent high of 172.29 if we can shift that hourly momentum. Short-term double top to be watching tomorrow. PONY, daily higher low is 65. Bulls have to break 74 and 75 to change the daily trend. If we break those levels, there's a lack of resistance until 96, but we have to break both at the same time, and we have to do it before support of 65 breaks. Keeping in mind that even if that does take place, anything under 96 is just a weekly lower high. FSLY, so the volume was missing this morning, and it looks like we topped out for now. So we are just looking for an hourly higher low to form. There's no major red flags there. 31.86 was support, and that's a double bottom right now. If we lose 31.86 tomorrow, we'll have our high, low on the same candle, lower high, and we'll scout a higher low compared to 27.57. So all about that double bottom at 31.86 tomorrow. So Tesla ended up being a good top fish. Facebook ended up being a bad top fish with this morning's action. And Tesla bulls are going to have to hold 211 and break 232.44 to change the daily trend. Hourly RSI just getting oversold. Certainly looks news related. So short-term oversold bounce. Just looking for a 5-minute lower high on this bounce. And probably going to run out of time before we can see any meaningful follow-through. We had a solid move from the bulls on the daily, but we didn't change the daily trend. And that is required for the clear momentum shift. SPY is definitely a low volume day, but you have to consider that a lot of the bull move occurred in extended hours, which is why that volume is missing. And that'll be up at 40 million by the time we close. QQQ, 3 resistances. Tomorrow is going to be all about resistance tests for a lot of major sectors. NEE 225.57, and we did not break that level convincingly at all. I would call that a double top. So we're going to look for a 4-hour equilibrium with high, low, double top. Although this extended hours skews that a little bit. If we call that a double top, we need a higher low compared to 218.81. Definitely more hourly consolidation than the bulls would like to see. So I like the 4-hour time frame with extended hours off for the most clarity. And looking for the bulls to hold 218.81 and give it another test. But we definitely need a more convincing move for that new all-time high. We got the all-time high, but just not convincing enough. Work. So work broke its daily lower highs, but we have earnings, so earnings are going to dictate whether we can build off this momentum or whether we're going to look back to the all-time low. At least at this point, we can have a bearish reaction and the bulls can hope to hold that all-time low and have a support level nearby. If it's a bullish reaction, 32.48 is the next short-term resistance level. So certainly a lot of buying in anticipation of earnings. And we will see what those earnings say. Not a whole lot of profit taking at this point, heading into the close. Etsy is weak. Daily inside bar today, closing down at the low of that daily inside bar. And there's a lack of support. So 49.64, if that breaks, we're looking down at 47.41. Even if we break this inside bar bullish, we're just looking for a lower high compared to 55.50. So bears are fully in control of Etsy and comfortable. SPY bulls trying to close strong. So you guys on the daily chart, 2014 is resistance. Again, when I look at the chart for you guys, I don't get any useful information. And it's the same for any leveraged ETF, where it's just the underlying commodity shows me so much more clarity and continuity and less gaps, more clear levels, no time decay factor. So I don't ever chart leveraged ETFs. Sometimes if I'm day trading them, I'll go back and look and say, okay, what was the price of you guys when natural gas was this price? And that's how I'll use the chart. But other than that, I don't really find it useful at all. Because perfect example would be right now, you guys, to break its high, I'm not even going to do the math. The bottom line is we would need a much greater percentage move to break 2014 than a 1/3 of that move would be needed on natural gas. So it's all about natural gas and nat gas USD and 250 and the inventory report tomorrow. If we reject from 250, a daily inside bar will very likely form, and it will require that daily inside bar breaking bearish to see daily consolidation for a higher low. OH wants to close over $8. 801 was our recent high. You're not going to find many US MJ names that are at their 7-week highs, the highest price in 7 weeks. And OH is, which is notable. The volume is increasing. That's also notable. The weekly time frame is technically a little higher low and higher high. And there's a lack of resistance where we stand. We just have to be cautious. This name is so thinly traded, as are all of the USMJ names. It really just goes to show you how fast we would move if we ever got any hype FOMO news release for the sector. I was watching OH and $25,000 moving the price 1%. And think about what it takes to move CGC or ACB or CRON 1%. And we're talking double-digit millions for the most part. So I'll talk a little bit about market makers and why that is in the video later today. But the bottom line is it's very thinly traded, and that can lead to upper wicks and fake outs. But the biggest takeaway about how thinly traded these stocks are is that when the momentum shifts and when there is demand for shares outweighing supply, they will move quickly, just like they moved quickly to the downside. They will move quickly to the upside. And the next resistance after 820 on OH is going to be up at 829 and 856. Bitcoin bulls trying to test their high of 10,790. We're less than 1% away from that level, as the hourly bull flag is confirming. So we might not get that daily inside bar on Bitcoin after all. So solid close on APHA. It stood out all day today to me in the Canadian MJ space, it and VFF, but VFF had news. Nice close on VFF, but it had news which explained it, whereas APHA did not. So that's why APHA stood out to me by holding up so well, while the rest of the sector went red this morning. And SPY bulls are right on the verge of a key resistance break. So Dinsey will be live tomorrow to see if that plays out. Apple is coming up on short-term daily resistance, 210.45, and then we're looking at 214.44. Apple is probably the most choppy and unclear daily chart that you'll find in the tech sector. So that makes the QQQ daily chart important for me for clarity on Apple. We know if QQQ breaks its daily lower highs that Apple is likely going to be heading up to test its August bounce highs of 214.44. We have some nice higher lows. That is one thing that Apple does have that is clear. All these little daily consolidations are higher lows. So tomorrow will be all about 210.45 on Apple. Big day for Facebook and Apple. Netflix trying to close at the high of the day. So again, Netflix is giving us the textbook psychology of the falling wedge of a bear break with no follow through. 288 was key support. We broke it by 80 cents and saw a 2-day bounce. We just broke support today by less than that. What was it? 69 cents. and closing at the high of the day. So bearish exhaustion is clear on the daily chart. The question is, can the bulls go and UGAZ? Bull miners closing at the high of the day. Tesla's rejecting from 5-minute exponential resistance, which is always our initial target on oversold bounces. So I would expect a 5-minute higher low compared to the low of the day. But again, we're going to run out of time here before this bounce can develop much. I have no interest in trading T-God. I will probably never enter it. It's thinly traded, and it's a Canadian MJ name, and it had bearish news. 3 strikes and you're out. Only reason I'm trading on the OTC is US MJ. If I want exposure to Canadian MJ, I'm going to trade the more liquid names on higher exchanges. Bull miners getting a bit more follow through, trying to avoid that little double top. Amazon short term looks like the setup for a potential hourly equilibrium. We had the high of the day, low of the day, unable to break the high of the day. And if we pull back a bit more here, we would be looking for an hourly higher low compared to 1796. End of the day strength in SPY is keeping the bulls held up a bit. So it's not a picture perfect equilibrium on the hourly at this point. But that's definitely the shape that stands out to me. So Dinty will be steering the ship tomorrow. I'll be back Friday morning. Shortened week. And then all eyes will be on the FOMC from there. And of course, the natural gas reaction tomorrow will be key with 250 resistance. Have a good rest of your day.